Today we're going to explain the overall trading strategies that we are usually do in gold. So basically what we can do is I will explain the overall trading setups which is usually be useful for executing the trade and managing your proper risk, right? So this is the charts of gold on a 30-minute time frame. So what we can do is how could we take those type of trade so that this could be one of the reference point for the upcoming days. So I'm going to do a analysis and we'll find out where the potential point where we can execute the trade, so that it will be act as a reference point for the next time, so that we can execute the trade accordingly, right? So the first one is, this is the chart of gold on 30-minute time frame. What we can see is it has created a low at this point, right? Then price moved up and finally creating like a resistance at this point. So price drop down, okay, fine, but this is the point where we can consider this one as a support, right? So this is the support point and price drop down, that's a completely breakout, no problem. But when the next candle, this exactly one closing like a bullish candle, what you can see is the overall breakout becomes fake out, means we have got like a double bottom right at this point, right? It means the overall breakout becomes fake out right at the point after the candle closure like a bullish. So we cannot go for even a buy at this point, so we are waiting for a next candle, and the next candle printing like a bullish candle. But at the same time the issue is this candle has no wicked top, means there is a lower probability. But at the side by side, if you look at here, this is the clean range traffic to the left, this is the clean range traffic to the left. So we must be interested if the next candle, this one, just open at this level and created a wick like this, then we might think for a what we might think for a buy at this point, right? Just after creating this type of wick, by putting a stop loss right up over here, executed the buy point at this point, and we are expecting all the way up till this point where we can get a good risk to reward ratio. So this is the simplest way to get a kind of like this type of move in a trend, right? So the only two things that we need to consider is two things. The first one is good market structures, okay, market structures, the first one. So it has a good market structures at this point due to clean traffic. And the second thing that we need to consider is the obviously the volume which we can expect in a pre-London, London Open, or pre-New York, New York Open. So these are the 4 sessions we can expect a high volume, right? So this is the simplest way where we can do a trade, right? Okay, so next candle. Okay, so this is the chart on gold. This is exactly the 30-minute candle. So let's do analysis right up over here. So this is the point where seller sell, right? And price moved down all the way down, where you can see the potential buy zone to the left hand side. This is a buy zone. So right up over here, the candle printing bullish, means it has establishes the reference point and respect the reference zone as a strong demand. And if you look at this candle, this is even a bullish. So for going up, we're waiting for a candle to create something like a higher low at this point, right? So it has created a higher low. So and price continuously moved up, no problem, but at the same time it has created resistance, means it's a lower high. So downtrend continue, push down, but could not able to create a new low. So at this point what we can expect is yeah, this is the support point, and the candle pushed down and created a strong support, means this is the another support, and this candle created another lower high. If it's a downtrend, it has to broke this support zone, but could not able to broke this label, means again creating like a bullish, means it's a strong valid confirmations that we're going for a up at this point. This is the one low and this is another higher low, means there is a higher probability that the next candle will continue pushing up. So this is the resistance label where we can see a clean traffic, even though here is the resistance, but this is something called a minor resistance, and if there is a volume we can expect to fill all the way up like this. So we can make an entry at this level. It's a buy zone by putting stop loss middle of the candle, previous candle, and we can obviously expect this move, right? So this is the simplest thing that we can expect from the market. Okay, so here we go. Yeah, so this is something called the candle, and we are doing the analysis. So the third one is we are explaining this trade, right? So the third one is what we can do right up at the point is we are going to explain this candle, right? So let me make it a little bit a smaller one. Yeah, this one is good, fine, sorry, perfect, right? So we are going to explain this trade. If you look at here from the very genuine point, what we can see is it has created a supply zone right up over here, and if we draw the resistance, what we can see is even this candle try to broke this label, means it's a valid breakout, but the next candle broke and closed below this zone, means it's a fake out. So it is considered as a strong support, sorry, resistance at this point, right? So we are not go for a sell because it's a fake out, and candle, if you look at this candle, the body of the candle, it's too big. So we are waiting for a good confirmation, right? So it has created a support at this point, and then it has created some sorts of a lower high at this point, means it's a downtrend confirmation right from this point. So this is the support zone. We are waiting for a candle to printing like a so broken close below this support range. It's a bearish candle. So what we can do at this point is we need to wait for the candle to form like this one, right? This one is the candle that we are expecting. So this candle open at this level, retraces, yeah, grab the liquidity and broke the low of the previous candle, where we can make a potential sell, right, by putting the stop loss above the current candle, and we can expect easily this move. But at this point what we can do is we can close 80% of our position on sell and let the rest run by putting the stop loss at break even, or putting the stop loss at this zone after breaking this label. Yeah, so this is the basic way that we can do in a real time frame. So that's the first thing, right? Okay, so let's move to the next chart, where this is also the, yeah, this is something very interesting. So in this chart what we can see is we are talking about something interesting topic called impulse entry, right? We are talking about the final impulse entry. So normally impulse entry could happen at the point where you are not waiting for a confirmations, right? So when there is a high volume, um, uh, so this is impulse entry only happens when there is a high volume in the market. If there is no volume, impulse entry can't work. So it is very essential to look at a volume and do only impulse entry at a volume time. So if you look at here, it has created a resistance at this point, and right up over here it has created support. Basically this zone is considered as a ranging market, but when the next candle they are pushing up, rejecting exactly from the same label, rejection label, and the price okay, push down, breaking the low of the previous candle, you can took like a sell at this point. But the question is, where could you put your stop loss? Could you put your stop loss right up over here? I think that's not a valid idea. So in a real time frame, if I am in this trade, what we can do is we can okay we can what we can do is the simplest way that we can do at this point is take an entry, sell right up over here, putting the stop loss above this zone. Means if this candle broke the low of the previous candle, it has no business to retrace back in the zone. So if it retraces back in the zone, the overall trade becomes invalid trade. That's why I took a sale at this point, putting stop loss at this point, and after the closure of this bearish candle, I just trail my stop loss, and yeah, trail the stop loss and put a stop loss at this point at break even, and waiting for to fill all the way this week and close everything. So this is the perfect idea of any impulse entry in the trend, right? Okay, no problem, right? Okay, so let's move to the next, that is obviously this one. So I think many time what we can do is, if you look at here, the overall trend was obviously the down. I'm going to explain this one trade. So the overall trend was down, candle created a low, created a lower high, and create a resistance, means it's a valid downtrend from here, and the candle closed like a bearish, means what would you do at this point? What I do at this point is, if I in this trade, the first thing that I can do here at the moment is, after creating a resistance, I could go for a sell at this point by putting the stop loss at this level. SL would be this, entry point would be sell at this point, and TP would be to fill this wick, which one is TP. But I could not go for a sell after breaking the low of the previous candle, because I don't want to lose this move, and if it's a downtrend, it has no business to broke this zone. That's why I took this sell at this point, expecting to fill this week, and we took for the sell in this way, right? Okay, that's the very simple way in a trend. So it's basically a downtrend, right? So let's talk about the final one more, charts on gold. So let's take a glance, right? The overall trend was obviously down, creating a lower high, and again creating lower high, creating a resistance, valid, price moved down, no problem. But from this point, if you look at this candle, the way it rejected from the previous lower high, which is also called resistance, what we can see is there is a possibility that the next candle will continue to push down to fill this wick. That's why what we can do is, after opening the candle went up and created a wick, grab the liquidity and broke the low of the previous candle, where we can take a potential sell on a impulse entry in the trend by putting stop loss above the current candle, and closing like 80% at this point, and let all position close at this point. So this is something called impulse entry in the impulse entry in trend. So that's the very simple. And if you guys really like this video, please do not forget to subscribe my YouTube channel. And we do have a free mentorship sessions on Discord. We used to go in a live stream sessions, in especially a London session. So please don't forget to subscribe our YouTube channel and hit the bell icon button so that you will get a first notifications from the next video onwards. Thank you so much. And if you guys have any questions, please do not forget to comment below so that I can make the video accordingly. Thank you so much. Bye bye.